Thanks, darling. I've just moved over onto the Aussie, picking up a strong move on the Aussie dollar. Selling of the dollar. Just go on to the, where are we, currency indices, if I can find them quickly. Where are you? All right, there you are. There we go. Drop it out of the way. What we're seeing at the moment, this is, I've got the yen top left, dollar top right, euro and British pound. And we've got some decent selling on dollar. That's over on 15. You can see here the Canadian. It's one we were looking at earlier on, starting to roll over. New Zealand's not quite got there yet. Swiss franc starting to tick up. Pound's selling off quite strongly. And the Aussie is buying quite strongly on the faster time frames. Just go back to those charts. There we are. That's what's happening at the moment. It's on the Aussie dollar, good move. This is on 15 seconds, so this is very quick. I've got the trend monitor here, transitions, transitioned here into blue, transitioning here into blue. And what's driving it at the moment is very much both sides of the equation. Let's just have a quick look at the currency arrays, see where we are. There we are, one above, that's it. Move that out of the way, apologies. What have I got isolated out here? Let's have a quick look. I think it's the dollar. No, there we go. That's isolating out on the dollar, so that gives you a heads up on what is going on in terms of the dollar right now. As you can see, we've got strength in fact, the stronger trend is in New Zealand dollar. It's marginally stronger than in the Aussie, but a nice strong move there. Just isolate out here. Again, that's confirming the New Zealand dollar, Aussie dollar moving nicely. And what you want to see in tandem with that, obviously, is you want to see these guys here move down the other way because we're seeing selling of the dollar. So you want to see this lot moving up where the counter currency is the dollar, and where the primary currency here is the dollar. You want to see them moving down, and you want to see a complete stack. But this gives you a heads up instantly on the strength of the trend. Are you in the right currency pair? Is it trending strongly? Certainly is on the 3-minute, nicely on the 5-minute, and the New Zealand dollar. Let's just isolate this one out on dollar. There we go. A similar picture there. The Aussie dollar is actually the strongest on 15 right now. And what it also tells you is the sentiment to the market. Is the market universally buying or selling a particular currency? You know, what is the universal sentiment to the US dollar right now? Is everybody buying the dollar or is everybody selling the dollar? And when all of them are stacked in the what I call a full house, in other words, you've got all these currencies moved up to the top here, and these are gradually moving down to the bottom and stacked down here, that's a full house. In other words, the entire market at that point is selling that particular currency universally. The issue is that when you're trading on, as Anna said, on a single chart, if you're trading a single chart and you have no idea about the flows through the complex, you may well be trading in isolation in an opposite direction. If you think of currency flows as a torrent of a river, you clearly want to be trading with the torrent. You don't want to be paddling against it. That's not to say you can't, but first of all, the risk is much higher because you're not trading with the universal flow. And secondly, the probability is at some point it's going to reverse very quickly against you. That said, there are occasions when it's perfectly legitimate, for example, where a move is, or a currency is being driven by local news, typically politics. For example, we've had any number of examples over the last few years with Brexit, with elections and what have you. Or it may be a particularly local piece of fundamental data which is driving that particular currency in one direction and against the universal flow. But that's what it's about. It's really understanding that. And of course, you've got the same picture on the currency matrix as well. But this is just giving you a straight heads up. You can see it's flip-flopping around here on 3, but still holding up there. And what we want to see is really these currency pairs joining it and these ones falling away. It also gives you a heads up on when currencies are approaching overbought and oversold. You can see here on the ranking ladder alongside where currencies are starting to approach an overbought situation. They're in brackets in a darker color. When it actually arrives at that potential position, I'll use the word potential because you then go off to the chart to check it out, to look at the volume relationships and everything else, what the chart is telling you. But this just gives you a visual heads up as potential opportunities. This is now currency pairs as opposed to what we look at on the currency strength indicator, which is the individual currencies themselves, the building blocks of the market, if you will. And when, as I say, when these change to darker, to the brighter colors without the brackets on, that's when they've actually arrived at potential overbought and oversold condition. So that's all jolly good and dandy. Let's go back to the charts. There we go. Let's see what's going on. There we are. A little bit of a pullback. And if you head down onto the 15-minute, this was the big candle. This is where we saw a ton of volume on the other charts as well. Volatility was still actually trading inside that particular volatility candle, although it's got a bullish sentiment to it. You can see the buying that came in here. Lots of volume coming in here. Not as high as here as you would expect at the London Open, as I've highlighted already, but certainly a decent amount of volume under this candle. So the expectation is this candle's going to rally. The problem we've now got is when you look at the volume associated with this candle, this is a widespread candle. This volume looks a little bit lightweight. The reason it looks lightweight is because when you compare it with, you can't really move further outside, but when you look at this effort in here and you're looking at this effort over here, it looks a little bit lightweight, and therefore that's the reason you're seeing this pullback now, because the volume is out of agreement with the price action. And that's part and parcel of VPA. It's all about the comparative nature. Probably give you a better example over here on 15-second maybe. It's about the comparative nature of volume and price. What you're constantly looking at for is a benchmark candle within the session that you're looking at to give you some basis of measurement as to whether that particular volume that you're looking at, whether it's high, low, medium, in agreement, in disagreement, that's what you're looking at. So you're looking for candles which are similar. Then you're looking at the volume. You know, is that volume aligned? Is it pretty much the same? Is it way out of whack? And from that, you then start to interpret the whole basis of trying to understand whether it's a trap move, whether it's strong buying, whether it's strong selling, and so on and so forth. And again, just you know, on the 15-second here, this is very quick. I'm not suggesting you go to this chart, but I use it a lot. It just gives you, again, you know, why is the market reversing? Why have we seen this strong move lower? Now we're starting to see a reversal. Well, we've had a volatility candle here, 2 reasons, 3 reasons, in fact. You've got a volatility candle, so you're expecting something to happen. It may reverse or it may congest, but you are expecting something at the very least, and we've got it. Secondly, we've arrived at the volume point of control on this chart. So that's the heaviest concentration of volume. So you're expecting some congestion to follow. You're not expecting the market to drive through that instantly. It won't, because you've got a ton of volume sitting there. And thirdly, we also had some decent support in here on the accumulation distribution indicator. This is price-based support. The volume can be viewed as volume-based support. The price is price-based support. So we've got any number of reasons to expect the market to reverse off that. And it's yet another reason to use multiple timeframes in all your, whether it's for the charts themselves, or indeed whether it's using them for the indicators as well. Head up to the 3-minute. What are we seeing here? We've got a little bit of buying coming in here, but we've got the volume point of control here. So we're going to congest around there. We're not going to do very much. And if this market is going to break higher, then we're starting to set the levels in place for a move away from here. We're looking at this level up here, 61.20 odd and beyond, for a break higher and a break lower, probably through this floor here, again on good volume. But now we're waiting on a congestion phase. The market isn't going to move very far for the time being. That's putting it all together. Down onto the 15. What are we waiting for there? Well, we've had a decent move higher. Maybe we've taken some pips out of here. We've closed out for the time being. If for a longer term hold, we're looking for a breakthrough this level here and a clear away from this big volatility candle, and for development of a more consistent trend, if you like. Let's just go back to the currency strength again. There we go. Got some very strong buying in the euro now. I saw that coming, and I was looking at that earlier on, and without even looking at a chart now, really spoiled for choice. Moving up onto the 10 minutes. If you wanted to jump into that one, you're looking at Euro New Zealand maybe, Euro CAD. Let's have a quick look at that. Already underway. Is it underway? Okay. Currency charts, there we go. Let's just go to Euro CAD. Quick look at that one. There we go. Starting to see that develop. May not be very strong, but not developing strongly at the moment. Let's have a look at the, what was the other one? Euro Aussie or Euro New Zealand? Let's look at Euro New Zealand. Look at that one. Okay, that looks more interesting. Yep, there we go. That looks more interesting. Lots of volume coming in here. Nice VPA examples here. Strong buying under this candle. We've got a certain amount of buying under this one, but a ton of buying under this one. Very narrow spread, narrow candle, lots of volume, not much less than the previous candle. You know, it's a classic VPA, buying volume, stopping volume, coming in for a reversal. Just a really, really nice example there of what to look for, what we're seeing develop now on the chart.
And give you your timing.
And give you your timing, time to get in. In fact, let me just throw this onto the multiple Renkos before we wrap up. You're in your Renko charts and different, there we go. This again is using things in multiple time frames. We've got Renko on the top line and we've got time-based charts. These are very fast, 15, 30 and 1 minute, 15 second, 30 second and 1 minute. Yeah, just fling that onto Euro New Zealand. See how we're going, okay. And nice trend developing there, very quick. But if you're a scalping trader, you know, this is the way to do it. Using the Renko, which flattens out. The Renko optimizer, what it does, it delivers the optimal settings for any instrument, any time frame. So I can change any of these. I've currently got these on 15 seconds, so they match the time-based chart. And what it's telling me right now for Euro New Zealand, you know, we're running at 1.5 pips on that one, running 2.3 on this one and 3 on this one, because this is set to a minute. And basically the slower the time frame, and I appreciate this is within a minute, but the slower the time frame, then the increase will appear in terms of the brick size that is delivered optimally for you. You can of course use it to set your own brick size if you prefer, but we always use it with the automatic ATR setting that calculates it for you. And then obviously you're constantly checking that throughout the session. It will change from time to time. Certainly in terms of the faster time frames, you need to check them every few minutes just to make sure you're still running at the same speed. Works brilliantly with the trend monitor. You can see here below in blue, gone through the transitionals, and it works fantastically with the trend dots. The trend dots will always change first because they're very close to the price action. But you can see here, they change, but then they revert back. We're reverting back. The trend monitor went into a transitional color here, but it didn't flinch. It has gone back into the bullish trend again. And we've got exactly the same principle over here. The trend dots changed, they've gone into red. We didn't even get a transitional one there. We've gone into red. Now we're coming back into blue. Trend monitor's holding us in. They are the perfect combination for trading any chart, whether it's a time-based chart, but on the Renko, they are just outstanding. And if you use it in combination with a time-based chart, they are just brilliant. It's a brilliant way to either help them to give you the trigger to get in, or to stay in, or indeed the time to get out. We're in congestion here. You can see the trend dots have gone gray. We've got the pivots are firing off here. We've got a resistance level building in blue on the accumulation distribution. Got a weaker platform of support in below. This has only been tested once. This has been tested 2 or 3 times up above. If we flick through there, the trend monitor holds us in. The trend dots have now reversed. They've gone into blue again. Off up we go. You know, this is comfortable trading. As an intraday trader, as a scalping trader, you know, making money, just digging out the trades, going through the process, looking at the matrix, the array, the CSI, onto the charts, and then moving over onto something like this, and developing the opportunities as they come. You can see down here on the 1 minute, this is on the time-based. You know, this is giving us a straight heads up as to what to expect in a moment. Very strong level of resistance in here at, what is it, 83.65 odd. This has been tested multiple times and held. So we're expecting the market to pause at that point. So if we see it on the Renko, you know, it's no great surprise because the time chart's telling us what is like to happen next. You can see here it tried to rally and failed. So we may well see the same again. But the good news is if it breaks through here on good volume, then we've got a really nice run away from that move with a decent handful of pips to take thereafter. Did you want to add anything?
Yeah, just say I'll be setting up a similar thing on MT5.
Anna's going to do the same thing on MT5. And she'll do that for next time. Sorry? Have you done it or? Oh, sorry.
But
Oh, right, okay. Fine, just to wrap up, let's start with the indicators. You'll find all the indicators that we've shown you today at quantumtrading.com. They're for MT4, MT5, NinjaTrader 7 or 8, or TradingView. And just to make the point that the license for MT4, 5 and NinjaTrader 7, 8 covers both. So it's a license that covers both platforms. We're working on TradeStation. There's two versions. The reason it's taking longer is because we're working on both versions for TradeStation Global and TradeStation Securities. TradeStation Global runs on 9.5, and that's driven by Interactive Brokers. So if you have an Interactive Brokers account, it's a perfect combination which allows you to use the data feed from Interactive to drive the TradeStation platform. It's a very powerful combination, and we are working on the indicators for that, which is TradeStation Global. You can trade forex through there. Obviously, advantages of trading through Interactive Brokers through the forex markets. They're very, very tight spreads and all the rest of it, and all the multiple markets as well available through IB. And TradeStation 10 is TradeStation Securities, which is driven by the TradeStation feed. So it's really two platforms we're developing, which is why it's taking a little bit longer than it normally do. Sorry? Yeah. No, that's the complete forex trading program. We believe it is the gold standard, if you like, for forex education. It's comprehensive. Comprehensive doesn't really do it justice. It obviously includes the full set of trading indicators, whether it's for MT4, 5 or NinjaTrader, and there is the TradingView option there as well. The modules, we've got the 5 core modules: psychology, fundamental, relational, technical, mechanics. Technical goes deep dive into volume price analysis. Every single aspect is covered there in great detail, so you will come out as a VPA NinjaTrader. And then below we have a vast library of VPA chart examples, how to use the indicators, pulling it all together. We give you checklists, topic webinars. That's a huge number of webinars with myself and Anna on various individual topics: breakout trading, trend trading, reversal trading. It is all there. The webinar library, again, it's a huge library of tutorials, Q&As, and a resources library as well. It's massive, and it's backed up by 13 PDF downloads, which cover everything from psychology. There's a year in the life of the Fed, so that you understand statements, you understand their language they use, how the markets reacted to those statements, and a ton of stuff more. It's all in it, and of course it's all supported. We have the VPA chat room where you're welcome to join us as part of the program. Anna and I are there pretty much every day, and you're also supported. I have to say, we have some fantastic full-time traders there who give of their time very freely, and which we are indebted. And they are more than welcome to, they are more than happy to support students there. We are obviously there as well. It's just a very friendly community where you can ask questions and you can share trades, and they will share their knowledge and experience with you as well. It's just a great group to be with. So thank you for, I know I think we have 1 or 2 members here as well. So thank you for your participation, which is always appreciated. And you can find all the details there on the program. So thank you for coming along today. Really appreciate it. Hope you've enjoyed it. We will be running along, and enjoy the rest of the trading session today and the rest of the week. We will be back for 1 session on Forex next week, and 1 on US futures will be, I think it's on Tuesday for the Forex and Thursday for the futures, I think, but don't quote me on that. Anyway, you will have the details on the link anyway. So thank you for that, and we will run now, and enjoy the rest of the trading day, and please stay safe and stay well, and we will see you next time. Bye for now.